Welcome, everyone. Welcome to another Sales Success webinar. As always, my name is Alex Nichols. I am your host, and I'm going to be taking you through quite a bit today. We're going to be talking all about both technical, but mostly sales advice around higher loan limits, right? 400,000 and above. We're going to get into things like appraisals. It's going to be a good session. And alongside myself, I have my co-partner in crime here, Mike Orlando. Mike, how you doing today?
Very good. What's going on, Alex?
Oh, not much. Got a lot of coffee, got a lot in me today. So, what we really want to focus on here, folks, is the fact that for your borrowers who are looking to get 400,000 and above, right? We do full in-person appraisals. You may have heard me say that before on trainings. You may have kind of seen me before kind of cover that a bit. I want to dive into this. And the reason I really want to dive into this today is because last week we released an enhancement to Lead Portal where you can now see the timing on appraisals. So you can see when they've been scheduled, you can see when they have been complete, or when they're estimated to be complete. It's a little bit more of a process. I know we all are used to appraisals in the more traditional sense, but Figure is making it so easy for your borrowers. And Mike, you know why that is? Well, because it's free, right? That's the great thing. So the big thing here to me, folks, is I really want to push this not just to show you how the appraisals work. That's interesting, right? To understand the process. But I also want to talk about the product because the big thing here to me is the fact that for our HELOC, there are no prepayment penalties. This is a great opportunity for you to really push higher loan limits on your borrowers that get those offers. So it could be a situation where maybe they're looking to get X amount of money. Well, you could turn around and say, hey, maybe think about why. It will require a full appraisal. We can talk about that. But right now, with the current promotion, it's not going to cost you anything. So maybe you have to sacrifice, maybe a half hour over the weekend or whenever's convenient for you. So I'm going to show all this. I'm going to show this more in both the lead portal and the borrower side. We're going to dive into this. We're going to tail this to some new enhancements. Me and Mike have a lot planned over the course of the next couple webinars. Don't want to spoil anything, but we're doing a lot when it comes to the HELOC product over the course of this quarter, next quarter, whatever that may be. And as always, we are going to be doing live Q&A. So as Mike put in, if you have questions, please post them in the Q&A box. We will be doing that Q&A. I will be posting this recording here on YouTube as always. So you are more than welcome to rewatch this later, and I will be sending out an email to all of you. So with all that said and done, that fun housekeeping, let's dive right into it. Now, as always, this begins right here in Lead Portal. So we're going to go ahead and take a look by running an inquiry. Now, with that inquiry tool, I get a lot of questions when it comes to things like appraisals. What's so nice is it will tell you right up front if an appraisal is required. So we're going to take a look at this. But what I really want to just focus on, up front here is the fact that this is initially an AVM-driven product, right? So let's talk about this workflow. You're running an inquiry for your borrower, right? You're saying, hey, let's take a look at the HELOC. Let's take a look at offers. We're going to do that AVM up front. It goes through 4 different vendors as a waterfall approach. You may have heard me say this kind of stuff before. So you're going to get a copy of that appraisal report. We are going to do that AVM every time we can. If we can't do an AVM, we can do things like drive-by appraisals. But the realistic thing here to me is, okay, great. That's how we get offers quickly. But then if they get offers up to a certain amount, then we can do in-person appraisals during the application flow. But anything 400,000 and less, that's an AVM. We've already done that at time of inquiry, so maybe it could be a balancing act of saying, do you want to take less out? It's an AVM, it's going to make the process quicker. Or maybe we talk about getting more money. That's a full appraisal, but again, right now, Figure's covering the cost. One advice I have for you, I just wanted to show this, use the drop down every single time, no matter what strategy the borrower wants to go with. The reason being is because this dropdown is pulling data on the back end that's going to help our vendors identify the property, not just for the AVM, but also for that soft credit pull. So just keep in mind for soft credit, we do not need their social. So just some advice I do have for you. Otherwise, we're going to go through, we're going to select the occupancy type, and we're going to go ahead and select the ownership type, right? Now, with that occupancy type, right, we can do primary, secondary investment. Keep in mind there is some underwriting split between these, and that's another thing I wanted to kind of cover here. So with things like primary properties, Well, that's where we can go up to $750,000, right? So that's where we can really leverage the HELOC for those higher loan amounts. For secondary and investment properties, it's actually going to limit a bit when it comes to our max loan amounts, as well as it will cap CLTV at 70%, unless it's a first lien, then 80%, right? So a little bit less than the max of 85 on a primary. But where secondary investment really comes into play is how fast it can be. And I can do a whole side webinar about this topic in general. So if you have an investment borrower, to me, it's more about, hey, this is about speed. Where if you have a primary borrower, it could be like, hey, let's talk about you utilizing this HELOC, getting as much as possible with no prepayment penalty and the flexibility of redraws. That is where this can really come into play for you down the road. But we may need to discuss the possibility of a full in-person appraisal. And I'll show you how that looks on the next page. Otherwise, we'll just go ahead and say, hey, the property's not listed for sale. I'm going to put in the borrower's information. I'm going to put in their financial information, right? Total annual income, gross income with spousal income if we can. And then I'm going to do that permission for a soft credit pull through Experian and through Method. Now, with all this, you're going to know if there's offers in less than 30 seconds. And again, it's totally fine if they don't get offers because, hey, you found out in a minute or two. But once you do get offers for your borrowers, once you see all those options, this to me is where the conversation should come into play. And this is where soft credit's good for 14 days. So what's really important here to me is slow down to speed up. And you may have heard me and Mike say this before in the past. Don't just quickly go through this, send the borrower over a link to begin and go, great, you look through the offers, let me know if you have questions, right? This is where you can kind of sell them on it. This is where you can kind of see what their use case is and let them know how the HELOC works because it's such an interesting product. And I really want to dive into this before we look at the appraisal. So let's have this conversation, right? Number one, biggest thing, if you're not aware, it's a full disbursement product, right? It's not a rainy day fund. They're going to get that full amount up front. But there are no prepayment penalties. There are no fees for redraws. And in fact, we don't pull credit when we do a redraw. We'll re-pull an AVM just to make sure that nothing crazy has happened, but they're going to have an online account. They can do redraws as much as they like. As long as they're within their draw period, they got available credit, they can do a redraw every 7 days if they wanted to. So there's full flexibility here. So it could be a conversation with the borrower where they're coming to you. Maybe they're not even thinking about the HELOC. Maybe they're coming to you and they're saying, hey, I just need money for blank. Maybe I need, $100,000 for, my child to go to college this semester. Or maybe I need, a home improvement or big thing, debt consolidation. I think that's what most people come to you for, right? That's where you can then say, okay, well, hey, I just ran the numbers. I just ran an inquiry, however you want to phrase it. And it looks like you qualify for a lot more than what you're talking about here. So let's have a conversation. Maybe you're looking for $100,000, but hey, I just ran this. You're offered up to 600, right? And as a reminder, like I said, we can offer up to 750,000. So it depends on their offers. This borrower here got up to about 602. So it could be a conversation to be like, hey, now there are no prepayment penalties. So let's have a conversation about maybe you take out more money. Maybe you take out $500,000 and then you can turn around and pay back a portion of that almost immediately. Because again, since there's no prepayment penalties and they're going to have an online account, as soon as they're funded, it may take a day or two, but their online account's going to update and then they're going to be able to go in there and make a large payment. And in fact, you may have heard me say this before on training calls. I like to really talk about this. If the borrower makes a single payment of 10% or more in principal, it'll automatically recast. So there's flexibility in the redraws. There's flexibility in the way they use it. And I find a lot of borrowers just miss that flexibility. So this is where that conversation can come into play. And you can kind of say, hey, let's talk about taking a little more out, maybe a lot more out. The only thing they really need to be cognizant on is the origination fee. And to me, that is not a really hard selling point because it's not paid out of pocket. It is rolled into the total in a part of their monthly payments, and it acts as a rate buy down. So the higher the origination fee, the lower the rates, right? So this could be a conversation of, okay, you're going to take out more. You can pay back a portion, turn around, pay back a portion. However, keep in mind, since there's that origination fee, that fee is going to go up. but it's a part of your monthly payments. So your monthly payments may adjust. We can kind of talk about this, but keep in mind if you pay back a portion, it automatically will recast if you do a large enough repayment, right? So there could be a whole strategy conversation about how they want to take it, how they want to use it, how they want to make those payments. And we will cap that origination fee at 14,000, as you can see. So it won't go higher, but it just depends on the situation, right? Depends on how they want to pay it and use it. So again, I've had a borrower I was helping a couple weeks ago, and that's the reason I bring it up. They were looking to get money out for tuition. Their daughter was going to college, right? Just graduated, and they were trying to plan out the next 4 years of, payments, right? So it could be a situation, okay, we'll take out, let's say, maybe not $500,000. I don't know how much tuition is. Maybe it is nowadays. But you could say, take out this much money, turn around, pay back a portion, right? Pay back this much. And then you have the ability to then do redraws as she's going through college or whatever the situation may be. So again, this to me is a really good option for you to really upsell this because again, we're covering the cost of the appraisal. Because there is only that one real fee, that origination fee, that is just amortized into the loan. Mike, I said a lot here. Do you have any thoughts on this? Anything that's come up in your world that really comes into these like higher loan amounts or anything like that that really springs to mind?
Yeah, and it's a point you brought up, and I absolutely love it because I think it's a really powerful conversation to have with borrowers. Is you can encourage them, especially with home improvements, encourage the borrower to take more out than they think they need. Because if anyone's going through home improvement projects, right? It's never what you think it's going to be at first, right? There's always going to be something else that comes up. Or, it could just be something additional like, hey, like we already got all this work done to the house. Like, why don't we just get new carpets while we're at it? We can replace the windows. There could be, it's always something that's going to come up, right? So you can encourage your borrower to take out extra money. Hey, you're gonna get paid more on that extra amount that comes out, and you're doing it not at their expense because, like you said, you can make that single payment of 10% or more, put that money back because again, it's fully amortized, fully drawn. So you don't want your borrower paying interest on money they don't necessarily need right now just for your benefit, right? They can pay that money back as long as it's within our EPO, which is 90% in the first 16 weeks. And if it's over 10%, we're automatically going to recast that payment automatically and for free. We're going to recast the payment for them. So they're only going to pay the interest back and principal and interest back on the money that they need. Then they'll have those additional funds to redraw, inevitably that, those other costs come up.
And I want to touch on one thing Mike just said as a reminder, right? Because this webinar is for all our partnerships. Most of our partners will have that EPO policy 90% or more within 16 weeks. So still make sure the borrower's using a portion of the money for something. This is not a rainy day fund. Don't tell them just to turn around and pay it back right away. But the big thing here to me is that there is a lot of flexibility in upsell that I see a lot of LOs miss. They treat this more like a traditional HELOC, right? The old days, rainy day fund. I used to talk to borrowers about where it's just a line of credit. They get a card in the mail and then they use it when they need to. This to me is more of a hybrid, more of a flexible product, someone who needs cash now with the option down the road. So let's keep moving here. Let's look more at the technical aspects. So we're going to go ahead and select our rate here. We'll do a 30-year term. We'll do fixed. We'll make it nice and easy for this demonstration. And now we're going to have our loan breakdown. And this is full transparency for you as an LO. So you're going to be able to see how it's going to break down. So that initial draw amount, you'll be able to see that fixed term, that origination fee, right? In this case, it's being capped out because we're doing it so high. And we have a manual notary fee also rolled in because whatever county this was for, couldn't do e-recording in the county. So they have to schedule notary, nice and easy. But as we see here, it's going to tell you there's an appraisal fee. And again, guess what? Figure currently with our promotion is covering the cost for appraisals. We don't have a current end date for it, but it can end in the future. So I really say capitalize on this now. So anytime you do see this, okay, an appraisal is required during the application. I'm going to show you here what it looks like for the borrower, but keep in mind for you, it's a pretty simple system to tell your borrower, hey, you just schedule it. The appraisal will get done. The only thing with this is it's going to add on additional time. So this is an example I wanted to give, right? Borrower can go through the app. They can get most of it done fairly quickly, about 15 minutes or so. We'll take a look at that here in a second. But with the appraisal, We can get these done in about 3 days, but I usually say a week to be safe. It depends on when the borrower schedules it, when the appraisal comes through, how quickly we can process that information. So let's say a week to be safe to get that complete. And then in this case here, again, since we can't do e-notary, it's a manual notary where they schedule that. That has to be at least 24 hours in advance. That's going to add some extra time as well. So you're probably looking at about a 2 week process with rescission. But that's still going to be really easy for the borrower because they still don't have to do too much. Just a quick online application. They have to just have an in-person appraisal come by, and then they'll just do the manual notary. They get the funds pretty quickly. The actual application, though, you'll see still quick and easy. With all of this, in addition, we have direct debt payoff. And this is another thing I wanted to talk about when it comes to upselling, right? In addition to just simply saying, hey, take out more money, right? Just take out a full draw. We have our system we call IntelliDebt. This is direct debt payoff built right into the system where they can pay off things like credit cards, personal loans, auto loans, home improvement loans, and their most junior lien. But what's so nice about this to me is that it increases their loan amount. And again, this is something where you'll see that baked into the total loan amount that will show. So this potentially could affect a borrower in a way where they were maybe at 300 something thousand, and then it pushes them over to say above 400,000, then we require a appraisal. And you'll see that. But this is where you can say, hey, okay, you were looking for X money, right? Well, hey, you have the option to pay off these debts. So maybe now that's a conversation for that. Hey, maybe you want to pay off an auto loan. Maybe, maybe it's a sound decision. Maybe it isn't. Maybe it's a way for them to save in monthly payments, which I think most borrowers are really looking to do. But realistically, it's like, hey, you have high APR credit cards. Let's pay those off while we're at it, right? You have a personal loan. Let's pay that off while we're at it. We can amortize that into a 30-year fixed term, right? Or it could be, hey, we could pay off junior liens. Let's go ahead and pay that off, right? We'll get that in a new lien position. That can make it nice and easy for them. Maybe pay off an existing HELOC, whatever it may be on the property, maybe even just their first. We do better rates and terms on first lien HELOCs, right? So there's a lot here where you can have a conversation to say, okay, let's pay something off. Let's pay off multiple things, roll that into one payment, one nice and easy fixed payment. They can do variable rate if variable rate's an option. But to me, that's the conversation of saying, hey, this is where we can offer 15, 30-year terms, right? Higher terms at fixed rates, lower monthly payments for your borrower, and get everything condensed down for them to say, great, well, in this case, they can deduct it from that full disbursement. It is an option, so they could take that 500,000 and just deduct the loan amount. But the big thing here is they can also add on if they have the ability in their offer. And so since this person was offered up to 600, well, in this case, it's saying, hey, we're going to add on these debts. Boom, here we go. Now we have a higher total loan amount. Nice and easy. So with this, we can just kind of take a look. We can play around with those loan officer, have that conversation. And again, to reiterate my point, the borrower has 14 days, right, to kind of get through. You have 14 days with the soft credit pull to have that conversation. Anything you want to add on, Mike, before I continue on?
No, I think you covered it.
Nice and easy. All right, folks. Now let's do the technical. Let's take a look at what it looks like for the borrower. So this is for Figure Wholesale. We have broker partners. I'm going to have to go ahead and complete this for a broker borrower agreement. For your retail partners, you skip this. The big thing is once we complete the inquiry, it sends an email to the borrower with a link to begin. Now with that, it's going to have your name on there. It's going to have that link for them. They're going to go ahead and click that. For our white label partners, of course, this will be branded for you. I'm just going to go through the Figure website for demo purposes. But this is an actual borrower application going through this, right? They're going to make an online application. So they're going to go ahead and create a password. It's the first thing they do for this. They're going to go ahead and continue on. And they just need to continue from their dashboard. And the very first thing they're going to see is an offer page that is going to reflect your options. So they can look at that. They can make any changes if they want to, right? This is why I think it's really important to have the conversation ahead of time. So when they get to this page, there's no surprises. They're not spending days thinking it over, looking around elsewhere. They go, great, that's what I talked to my loan officer about. That's what I'm going to go with. But I want you to notice again, there is always a contact card at the top right that pulls from your profile in Lead Portal. So you can always customize that, put in a headshot. I always like calling it out. I like the branding. But let's continue on, right? Let's say I'm Mike's borrower. I say, yep, that's great. Mike talked to me about this. I want to do this. Let's go ahead and go through, right? And of course, it's going to tell the borrower there's a $0 appraisal fee. I hit save and continue. Well, the next thing I need to do is I need to provide more information. I'm going to enter in my social here as the borrower, and I'm going to give permission for a hard credit pull, but I do not do hard credit until after I link my disbursement account, which is after income verification. So we'll kind of take a look at that, but just keep in mind this is where the borrowers will enter their social. They're going to go through HMDA, for all those kind of questions. I'll skip through this. This is not the interesting part. And of course, what everyone likes to see is income verification. We've done some great webinars on this, so I'm not going to cover this really too much. But the borrower just needs to verify their income electronically by linking a bank account, another method. There are multiple ways for them to do this, and we can always answer questions. And again, there are some great videos on our YouTube where we have covered this in full. But with this, I'm going to verify via Chase, my bank account, right? Let's go through Plaid. So it's going to pop up their actual, Chase online website. They're going to log in, and then they're going to have to give permission for Plaid to pull that information. So we'll go ahead and allow that, and then it's going to go, and usually there's a little loading bar for about a minute or two, and we're good to go. Now, with this here, we can see their disbursement account linkage. I want to take a quick moment to talk about this real quick. Number one, once they select this, we're going to pull hard credit. Keep that in mind. Number two, right, especially for those higher loan amounts, borrowers who are wanting the income to go, the money to go in there. Keep in mind for disbursement, this is also going to be where those monthly payments start coming out of. They can change that later, but it's going to be after their first monthly payment. So have a conversation to say, hey, this is where your disbursement's going to go into. It can be the account they linked via Plaid, or they can connect another account. They can also put in an account and routing number, but we're going to ask for a voided check. So there's some options. Try not to have them do business bank accounts. It's a whole difficulty of verifying ownership. Usually personal checking works best, and doing it through Plaid. That way they verify in 30 seconds instead of a couple days where we ask for a voided check. Then once they move on, they're going to authorize auto pay. We pulled hard credit. You didn't see it, but we did. And then finally, they have to verify their identity by taking a photo of their ID or uploading a photo of their ID, right? Stuff I've covered before. That's the reason I'm kind of speeding through this. So we can see here, typical app flow. Borrower goes through this, can take them as about much time as I've done. All right, here we go. This is where it is, right? The borrower is going to be stopped at this point. This is where Clear Capital is going to go ahead and contact the borrower for them to schedule. They are going to receive an email with a link to schedule their appointment. If they have any questions, there's going to be a phone number listed at the top of the application, and you can see a little chat button at the bottom right. But realistically here, all the borrower has to do is schedule when they want that appointment. They're going to go ahead and put in their information for the date and time. Clear Capital is going to go ahead and send out an agent. They're going to do an in-person appraisal, right? So just keep that in mind. But it's a fairly easy process for the borrower because, again, they don't need to really supply any information, payments, any of that nature. So at this point, we are stopping the application because we need to wait for that appraisal to be complete. That appraisal, once complete, that information is going to be sent over to our operations team. They're going to need to process that. So again, it's going to take a little bit of time. To be clear, again, just to repeat my point, we have completed these before in 3 days. I say about a week, though, just to be on the safer side. 7 days, not 7 business days, but just keep that in mind. How's that going to look for you, though, right? This is what the borrower sees. They'll receive the email. They'll be working, to get that done through Clear Capital. Your loan officer, though, what's this going to look like for you? You're going to see a status called on-site appraisal pending. That on-site appraisal pending is going to let you know that the borrower needs to schedule, and that needs to go through. Now, before, a couple weeks ago, all you did was see the status, and you had no idea what was going on. But again, we added a new enhancement where now you can see that information directly here in Lead Portal. So if you go into the action menu on the right-hand side, that is where you're going to be able to go in directly to the details page. So now if you scroll down, right, we have all our information. We have, all the regular underwriting and everything. I'm just kind of scrolling a bit slow. You will now see the appraisal information. What is important about this to me, the most important thing, is going to be the order date. You're going to see when this was ordered by your borrower. Obviously, no payment date. We're not charging for these right now, so you're just going to see the order date. So in this case, I placed an order here this morning at 7:34 a.m., right? Now, with that, you're also going to see when the inspection is scheduled. So the borrower is going to order it, You get to see when it's ordered. You get to see when the inspection is scheduled for, and then you actually get to see the expected completion date. Now, I want to talk about this for a second. This is an estimate because, again, it's not just an appraiser goes in, they do their thing, they get it done same day. They need to complete, and we may be used to this in the industry. It's going to be sent to our operations team. There's a whole processing period, right? That can take a couple days. So what you'll see in here is you'll see the order date. So you go, great, the borrower scheduled it. If it doesn't have an order date, if it has the dashes like this, they have not scheduled it yet. If you see the inspection date, you'll see the expected completion date. You go, great. That's what we can talk to the borrower about, saying, hey, this is when we expect it to be. But once the actual order is complete, once the appraisal has gone through, you'll see the actual completion date in here. You'll see the actual completion date, it'll be done, and then we'll see the appraisal value. I know this is a time in the future. This is just an example, folks. I just wanted to show you what it looks like. So just to be clear here, right? Once our team does and process everything, it'll move on to the next status. You'll see the actual appraised value. You'll see the information in the documentation, as well as maybe you haven't been doing one of these in a while. I did want to point out we did add notes recently, a couple months now, but these are from our operations team. So you'll see any notes, anything that's being worked on, including any appraisal processing and things of that nature. So you can kind of check in here what's going on, when did your borrower schedule it. But again, it's a borrower driven process. So really just go ahead and let them know, set the expectation ahead of time. There will be an appraisal required. You will get an email and information through Clear Capital once you hit that point in the application after income verification and identity verification, right? In addition to that, make sure to schedule. And if they have questions, they can contact by calling in or chatting into our operations team. But we simply just need them to schedule and we just need them to be available. We'll do an in-person appraisal. I'm sure we're used to that. But the biggest thing is, again, these are only on loan amounts over $400,000. I want to be clear about that. If it's 400,000 and less, that's an AVM. That's nice and easy. It's free. It's instant. It goes through and processes right as you run the inquiry. Same thing. Some of you may have a referral link. If you use your referral link, borrower, same process. They just have to fill in that first information. Anything you want to throw on there, Mike, at all?
I don't. You were pretty thorough with that one there, Alex. We do have a quite a few questions in the Q&A if you want to start
Perfect.
hopping into that. I'm going to jump down here. So what happens if the loan amount that was given to my borrower is less than the amount that we need? Given the AVM was lower, we know the value of the property is much higher. Can we request an appraisal so we can get more value from the home and increase their loan amount?
This is a really good question and something that we've been really pondering. I'll put it that way because it's
Mhm.
it's kind of a double-edged sword situation where if we allow upfront appraisals, well, sometimes I will see LOs request that when that's not the limiting factor. Let's put it that way. So let's talk about facts. As of right now, we do an initial AVM and we go by that. You cannot request an upfront appraisal for actual offers. So if you run an inquiry and it comes back and the AVM is low or they don't get offers because of that, go somewhere else. And that's the truth of it, right? Is because you found out in a minute or two. If we cannot run an AVM, again, we can do things like drive-by appraisals, but we're going to go by that AVM. And a big part of that is about the speed. And it's because, again, we go through multiple vendors. We have actually an outside vendor vet the other ones. There's a lot of accuracy to it. But also keep in mind when we do that full appraisal as well, that can also adjust their offers. So it could be a conversation to let the borrower know to say, okay, well, let's do a higher loan amount. We're going to do a full in-person appraisal. Final offers will not be guaranteed until we do that, full appraisal. So you'll be able to see that appraised value, and if offers do change, they'll be able to see and customize on a new offer page. Maybe their appraisal comes back, maybe they get a lot more, but again, it's not always limited by CLTV. I see that happen a lot where it's actually FICO, DTI. In the resource center on Lead Portal, I do have my product guide. There's a great eligibility table, and I'm not just saying that because I put it in there. You'll be able to see how it really breaks down. But short answer, AVM up front, appraisal if it's a higher loan amount.
And we have a few questions that are all surrounding the EPO and everything like that. So I
Mhm.
think we can just kind of like talk about this for a minute and kind of knock out some of these questions all at once. So first of all, the prepayment penalty, right? If the borrower pays back 90% or more within the first 16 weeks, that's when the EPO is triggered, right? No penalty to the borrower, but we are going to claw back compensation from the loan officer. So it's 90% in 16 weeks. While there's no prepayment penalty, right, there is an EPO. So kind of two separate things. But again, no penalty to the borrower, but we will claw back LO compensation. Um, and then that being said, we also talk about the recast as well, right? So the recast is we will recast the loan, the payment automatically when they pay back one payment, a sole payment of 10% or more, not kind of like it's not every time 10% comes down, like we're going to recast it, right? It's one payment of 10% or more is when we will recast the loan. And at that point, they'll be able to save money on their payment because now we're going to recast it at what is due as opposed to the complete loan amount. I think that kind of knocked out a bunch of them. So let's start going back down the line again here. If the loan's gone through the stages and approved, who's the best point of contact for funding questions?
Oh, that's a good question, anonymous attendee. It will depend on your partnership type. And the reason I say that is some of our partners have different servicers. For a vast majority of you and those through Figure Wholesale, Figure is the servicer, right? So just as a reminder, the borrower will, once they're complete with notary, go through rescission. If it's a primary, secondary investment, we know no rescission. And then we fund after that. And then we're going to handle off like paying off the creditors if it's direct debt payoff, as well as we handle recording on our end. Funding is via ACH. I want you to all be aware of that. So while we may initiate funding automatically, it usually takes about 1 to 3 days for that to be available in their account. So really short answer here is for any funding questions. Again, it usually goes through our servicing department, but I would double check internally if there is a different, say, servicer. You can really just contact our team, salessuccess@figure.com if you would like an answer, or you can call in at the customer ops department and they'll give you a response as well.
So next one is I have a seller who needs cash for repairs for a property already on the market. I was told you have a temporary product. Also told they wouldn't get paid, but that's okay with me. So that is correct. When you are filling out that inquiry form, one of the first questions up towards the top is the property listed for sale? If you state that the property is listed for sale, that does two things. One, it either drops or eliminates the compensation based on your partnership with us and who you're working for, basically. But the other thing it does is it waives the EPO, so there won't be any clawback or anything like that. So as long as you mark that the property is listed for sale, that waives the EPO. All right. I have a client who has a lot of equity and wants to use it for debt consolidation. She was married, now divorced. Decree is available, but her ex-husband's mortgage is still in her credit. Is there any way to not have that affect her DTI or her LTV for that matter?
Yeah, that's a rough situation. I'll be very upfront about that. The reason is because we use automated systems. We don't have like manual interventions when it comes to that. So very shortly, what the system's doing is it's pulling data from Experian to report their revolving monthly debts, right? So if it's something where it's, hey, her husband's mortgage is still on her credit, well, that's kind of the information we'll be pulling. I recommend still running an inquiry. That way you could see if there are offers. You can go into the details of the file to see kind of the underwriting information. But if it is something where you're like, hey, that's popping up off that experienced off credit pull, nothing we can do. It's an automated system, but you found out in a minute or two. Now you can, shift focus to another strategy for your borrower. Oh, it looks like you're muted, Mike, but it looks like the next question is
Yep.
in-person. No, you're fine. In-person traditional appraisal or BPO? In-person traditional, appraisal, as we all know and love, right? They're going to walk around and touch everything. The only time we do BPO is if no AVM is available. We can do a BPO. What's going to happen is you say you run an inquiry, you'll know that's happening because it's going to have you put in the estimate property value. That's what it's going to use for the prequal. And then during the application, it's going to tell the borrower, hey, we're going to do a drive-by appraisal. That will cost them $180. That's rolled into the total, though. They don't pay it out of pocket, but it's something where they're going to go, okay, I'm going to request this. It's just a drive-by appraisal. It's usually pretty quick, but it can take 3 business days, just depending on how, quick they want to do it, where it is, that kind of thing. And just keep in mind, qualification obviously is based on the BPO. The one thing I will say, let's say BPO comes back low, they're declined, we're not going to charge them at $180. So, it's really no penalty type of situation. I usually just say if you run into those situations, contact us if you have questions, but just tell the borrower, hey, it's going to be drive-by appraisal. We're going to go that route.
All right. So, what is the max term for the redraw? So, traditional HELOCs usually 10 years to access. The LO upsells the client, they give back the money, how long to access. So, it depends on the term of the loan. If you have a 30-year loan, we have a 5-year redraw period. Then we have the 20 and 15-year loans, which is a 4-year redraw period, and the 10-year loan is a 3-year redraw. So it just depends on what the term is. All right. And what is the minimum credit score for a realtor using her S Corp bank statements?
That's a good question. And honestly, it depends on really the ownership type, right? So for primary properties, we can go as low as 600 if it's second lien position, usually 640 and above for most people in primary. If it is an investment or secondary property, 680 and above, to be clear on that, right? So most of the time when you're like, hey, we're going to link business bank accounts, it's an S Corp, I'm usually thinking like investment or secondary off, a borrower usually about 680 and above. And again, that's a FICO 9 score, but really suggest you all just run the inquiry. It does not trigger leads. That's the most important thing to me. You'll find out right away. They have offers.
When is IntelliDebt going to accept more debts, including existing seconds? It tends to cause issues for borrowers wanting to do debt consolidation.
Oh, stay tuned to upcoming webinars. I can't talk about it too much, but we're doing big improvements to IntelliDebt, our direct debt payoff system for all you. I'm not going to say too much, but I'm going to say, hey, keep registering for these webinars. I have some good news for you coming up here, hopefully in a month or so.
All right. So a couple Plaid questions. Dual income in a state where we can use spousal income that's deposited into separate accounts. Do they do two verifications through Plaid? So this is kind of like a multifaceted question.
Mhm.
First one is they have to be joint accounts. Like at least the applicant needs to be on all the accounts that are listed. They can't just be two separate checking accounts, correct?
Correct.
Yep. And then the other thing is there's no limit to how many we can use. I was working with an LO and they had a self-employed borrower who had just tons of different businesses. How this person keeps it all straight is beyond me because they had 17 separate business checking accounts. So I say there's no limit. If there is, it's at least 17. So, yeah, there's really no limit to how many you can do, and you can stack those checking accounts to verify your income. Let's see here. Why would Plaid auto default to $12 when verifying income in some cases? So this is something we do see from time to time, and it's actually sometimes on the bank side where they have like a security measure in place that doesn't allow third-party access. Your borrower is going to have to go either onto their account online, or I always just say like you can call your local branch a lot of times and just make sure they turn on allowing third-party access because it's connecting to Plaid. But Plaid's not allowed to look at anything. It's essentially what's happening, and it's defaulting to $1 a month, which is why you see those $12. So it's allowing third-party access on the bank side. That's what it is, I think, most of the time, right, Alex?
What it is, realistically, here to your question, Bryant, is it doesn't know what to do because it can't access the account properly. So it's just putting $1 every month, 12 months. That's where you get $12. It's just an error, is really what it is. So to Mike's point, tell your borrower, I'm seeing this a lot. Have them log into their bank account and make sure third-party access is enabled, and then have them go ahead and reconnect it. That or try another way like tax account linkage or like a payroll like ADP, or any other method. We got a lot of methods. But yeah, that's why it's $12. It's just a little error.
Doesn't matter which bank account they use. I ask because some borrowers are paid in more than one bank account, such as pension, Social Security, their employment, so on and so forth. Yeah, as long as that
Mhm.
borrower's name is on the account, they can stack as many different accounts as they'd like to.
And honestly, Mike, let's take a pause here. Bella, I
Yeah.
really want to focus on this. That's a really good point, right? I have a lot of loan officers who will, in my opinion, overcomplicate income verification. Our bank account linkage to me is very powerful because if you have a borrower, they're getting regular deposits for things like Social Security income, or maybe they're getting their employment income in there, right? It will gross it up. I see a lot of confusion in that. We gross things up in those bank accounts, and we take business bank accounts without docs. That's powerful to me for self-employed. So, really think about this, folks, right? When you talk to your borrowers, have them try their bank accounts first. We take the highest method. There's no penalization. If it doesn't work, they can try something else. So yeah, go with Bella's point here. Link up bank accounts. That's my advice.
Again, that's a great point that you made too. Like there's no penalty for trying more than one method, right? In traditional mortgage world, if you were to give your bank statements and you verify for X amount, and then you decide to, submit your taxes, and all of a sudden that amount is lower, guess which one you have to take? We're taking the lower one, right? Not here. We are going to use the highest amount, so there is no penalty to the borrower for trying different methods to see how much they can qualify for. Right. Is there any chance Figure will be developing a way for loan officers to co-pilot a client when they're going through the setup of their account? They seem to get stuck on income verification and often select accounts that they should not.
I will say 2 points to this. Number one, we do not have a way. We don't have on the roadmap that I've seen any like Copilot like screen sharing built in. We do have something I think better coming up. So you'll see, and we're going to be covering this on some upcoming webinars. I'm not going to cover it too much, not to spoil the surprise, but we are going to build in more into the inquiry for you to upload upfront documents and information to save the borrower from having to do it on the application. So this is going to really help things with like identity verification and the like, as well as we're continuing to build out more and more in Lead Portal. And we have a lot of things planned on the roadmap. So no plans right now for, say, like a co-pilot, like do it for them, because it still needs the borrower doing it. But look forward soon. Again, more improvements coming out where we're going to have built-in features for you at the beginning of the inquiry process to help the borrower out initially with some uploads. And I'll talk about this and cover this on some webinars coming up. I just don't want to spoil any release dates in case we push it. You know how it goes.
Yep. Calling can take an hour for most borrowers. By then, they are frustrated and want to cancel. Can we decrease wait times? Tell you what our suggestion is use the chat. The borrower has access to a chat function in their portal. It's located in the bottom right. It's a little button that says chat with us. First, they're going to connect to an AI bot that I believe has been trained. Alex trained the bot, right? Is that
Yeah,
true?
it's using what's in here, and it's
Yeah,
crazy.
so you're basically connecting to Alex at that point. And if they really do need to speak to a live person, they can just chat in and say like, "Hey, I just need to speak to a live person." Can't guarantee that that's going to be Alex. It's probably not going to. But that is the fastest way to get any help. Not any help, but the fastest way to get the assistance for questions that they have about their application.
And I will say too, we hear you. Let's put it that way. We
Hmm.
really hear you. It honestly is, I would say, good news. We are very popular. We have a lot of folks who want to use our product, a lot of folks looking to tap into equity. We have a fantastic operations team that is just being stretched thin by how much volume we have, right? So if you're experiencing long wait times, we see it every day on the screens in our office. And the heads of operation are working really hard to not just lower that, but we're getting the right people hired on, skilled agents to be able to help out. And it's being worked on as we speak. So those wait times are really just an indication that, figure tech is popular. But don't worry, it will go down here. And it's a extremely high priority. So we do hear you.
All right. And the next one is, can you post the contact information for your group's ops team? I'm going to put that in the chat right now. Right. Borrower is a W-2 earner and also gets rental income, but he gets his income from three bank accounts from three different banks, so he'll be allowed to log into three accounts. Yes.
Yep. Yep. And you can do as many as you want. 17 apparently is the most I've heard. So feel free, as many, and that's all one method. It adds together.
Mhm. And what is the vendor waterfall? If you cancel a loan, will the AVM stick on a restart, and for how long? Sometimes another vendor makes the deal work on a cancel and restart. When may another AVM vendor enter the mix?
This is a good question. Bill, you're asking it. I love it. I don't have a definitive answer for you, Bill. You're going to hate me for this. So when we do the AVM waterfall, right, it's a waterfall based on both priority and location. So what's going to happen there is it's going to be taking a look to see, if our top vendor can pull it, what data it's going to pull for. And again, our fourth one is actually going to be vetting that information. So you're right. What happens sometimes you run it, it doesn't do offers, you pull it in a couple of weeks, suddenly it's a different vendor. It's pulling property information, home sales in the area. I don't have all the logistics on the back end of, what our engineer team have really cooked up. My thing with this, though, we will be retaining usually that AVM data for a bit. We will try to rerun the AVM a lot of the times. I would say give it a little, like if you run an inquiry, AVM doesn't work, you don't get offers, give it about a week or two. You may run it, you may see a different vendor. Don't rely on it though. We're really trying to go by the most accurate in the closest vendor, the best vendor that we can. But for details, maybe I'll look into it, Bill. I'll reach out to you here in a little bit. Let me see if I can find an answer.
All right, Tony asks, how do I get a link that I use in ads where potential inquiries can apply without my knowledge? My previous company provided that, but the new company doesn't. So the direct link is for our correspondent retail clients. That is not available to our wholesale clients.
Correct. Tony, I remember you from somewhere. Double check. Yeah, if you're with Figure Wholesale, that's specifically, Figure Wholesale folks, you have to go through the inquiry because it's a brokerage. If you are through, like, say, a retail shop, then you're going to have a referral link. If you want more information, if you're unsure, you can just go into your profile and lead portal, or you can email us, salessuccessfigure.com. We can always talk to you and give you more information about the different workflows.
Okay. If the current property is under a trust, can they use their personal name or do they have to stick to the current vesting?
Ooh, I like this
Good
question,
question.
James.
Yeah.
It's going to be under their personal name, so make sure if you do the inquiry or they're using a referral link, whichever flow, it's their legal name as it matches their ID. Doesn't matter how it's on title, the ID,
Mhm.
right? Driver's license, passport, whatever that is. We're going to pull their credit, right? Here's the thing: if it's held in a trust, one, it needs to be revocable, and then during the application, I actually showed the page where they put in their social. If it's held in a trust, that's where they're going to put the name of the trust. And then what's going to happen is we're going to ask for their certificate of trust, not the full trust agreement, the certificate of trust. So if you know it's in a trust, tell the borrower we need the full certificate, has to be notarized, a complete doc, and then we're going to match that up with what the name is that they put in for the name of the trust. So tell them, hey, you're going to have a point, you're going to be putting in your social, your marital status, they'll ask you for the name of the trust, match that up with what's on there with that certificate, and they'll be good to go. But again, has to be revocable, no life estates, things of that nature.
And the same goes for properties, investment properties in an LLC, right? We're lending to the individual borrower, not to the LLC. So just because the
Yep.
property is held in an LLC, you're still applying, the borrower themselves is still applying.
Whatever direction I am, I'll point at Mike.
You were right. He got it.
Yeah, okay, okay, good, good, good.
Need a recording of this call. I missed the first 20 minutes. Good news. This is going to be on our YouTube page, right,
Mhm.
Alex?
It will be. Give me a bit of time to do some processing on it, some editing, and then I'll get it up on YouTube.
Yep. And I have
Links in the
that.
chat, and I'll email it out.
Yeah, our YouTube video, yeah, YouTube is in the chat. Be sure to go check that out. It's got all of our past webinars on there and a lot of other cool videos too. All right. Let's see. Can there be an add note feature added to the LOs to enter into the note section?
We're talking about some things around the notes section there, Bill. We have a couple other things on the roadmap right now, but we're going to be adding some increased access for LOs for like communication and such. The big thing we're focused on right now is SMS communication. So we're working on that. We're trying to get that out. I'm working on an AI chatbot for some things that'll be integrated into apps. So LOs can just ask, hey, what's going on with this app to an AI chatbot. But we're also going to be looking around some other ways for communication, ways to expand out notes. So I don't know anything on the roadmap about LOs adding notes, but I'll take the feedback back, Bill, and then I'll have a conversation, I think, around that because that's a good idea.
Were we ever going to lend on manufactured homes?
Not that I've seen. Um, Not that I've seen. I'm sorry, my friend. Maybe in the future, who knows?
All right. I have a borrower that's in the military, stationed in Germany for a year, but his primary is in California. Can he do an e-notary on base in Germany?
Oh, what a cool question. Yes, yes, he can, as long as it's e-notary and he has his ID available that he uploads during the application. So keep in mind, like manual notary, it'd have to be, somewhere in the States, it'd have to be in person. But if you know it's an e-notary and they have the availability, it doesn't really matter their location, as long as they have their ID and they're available to do it.
Let's see. We have a white label account. I just closed my first deal with you and was told we only have our own internal AE from our own brokerage. Is there a way to have a rep with you that I can reach out to answer questions that your sales line can't help with? My loan closed the 299 origination fee, but we were only paid 199. Why would that be? And is there some way to rectify that? Or okay.
Yeah. Yeah. Oh, feel free, Mike, if you were gonna
Yeah. So
take
first of all, the
this.
origination fee doesn't have that. That's not your comp. Your comp is predetermined in the contracts with your mortgage company and us. The origination fee is the fee for doing the loan that the borrower pays. That has nothing to do with compensation. Um, as far as the other part, is there a way to get a rep?
We do not have direct reps. Just keep that in mind. We have hundreds of partners, and there's only just usually me and Mike in Lando once in a while, right? So the idea here is we have sales success at figure.com. You can email us. You can always schedule time with us if you want to jump on. I usually say email us if you need anything, as well as that MLO direct line if you're through Figure Wholesale or the ops, if you're through retail. But if you just have like quick question like that, sales success at figure.com, and we're always happy to answer. But no like direct rep or account managers for individual brokers.
Right, what is the minimum loan amount draw? So the minimum initial draw, meaning the actual loan amount, is 25,000, and then any redraw, the minimum is $500.
Unless you're in Alaska, then it's 25,000 and a dollar. Don't ask me why.
Let's see. Are retirement accounts allowed to be accessed through Plaid for income? Can they use their PayPal accounts where they receive income?
No to PayPal. They can connect retirement accounts, which we have some fun calculations if they're under like 55 and a half and some things like that. So I usually would talk to borrowers like because we can do things like asset depletion, but again, I really stress like bank accounts. But in this case, Derek, if you're saying like, hey, they get their income through a PayPal account, that's where we can struggle a bit because, it really needs to be an institution that Plaid can link up with. My biggest thing would be if, it's an account that isn't supported, they can try taxes then, I think is another good option as well. That could take minutes as long as they have an online account like an IRS.gov account.
Can I email borrower docs to figure along with the HELOC ID to upload things like ID without calling and waiting on hold?
You can. So, depending on your partnership type, there are a certain email. It's going to be loans at something, depending on your partnership type. So, again, you can email us if you're unsure or check internally. As for the ID upload, right now, today, the borrower does have to upload something on that page. So, it really is something where it's saying, hey, just have them upload it, tell them, talk to them about it. They can take a photo too. Like if they're doing on a laptop, it'll give them a QR code where they can scan it and then take a photo of their ID. But like I was saying, stay tuned for future webinars. We're going to have the ability for you to upload IDs for the borrower during the inquiry. So I think we're going to sort this here pretty soon to make it easier for y'all.
And just to touch too, because this is such an online digital process that is very borrower driven, um, you kind of have to make sure that your borrower is up for it. Let me put it that way. I've talked to LOs that say like, well, my borrower is 83 years old and they don't have an email address. It's like, well, okay, well, we need to stop kind of what we're doing right now and kind of rethink if this is the right way to go because at this time there's very little that you can do for the borrower. This is the whole point of Figure really was to give time back to you to focus on bigger picture stuff. So you weren't sending your clients that wanted to do HELOC to their banks and credit unions. You get to keep them in-house, right? Um, so in those cases, if they're unable to upload an image to a portal or anything like that, I think we just have to, it's about managing expectations and making sure that your borrower is up for what is going to be asked of them throughout the process. Will there ever be an option for the LO to chat in lieu of the borrower?
Um, Not yet. Let's just say it that way. I'm working, like I said, I'm working on an AI bot. But outside of that, as for like a real human, to Mike's point, this is designed to be borrower facing, right? Borrower does it. A lot of it is going to be through them, so they can call, they can chat in. As of right now, you can call or email in for support.
If a borrower cancels an app and starts a new one, is there a way to make sure the new application is an actual fresh start and not have the previous information linked to the new app?
You could try a different email. That would be the main solution there. Otherwise, talk to our operations department. Sometimes they have to detach some information.
Borrower's about to put his property into an LLC and wants the HELOC. Best to have him complete the loan and then move it to the LLC.
Yeah, the biggest thing to me, I'm not gonna give advice, right? I'm not a financial advisor. Biggest thing I would say, we have a 90-day seasoning requirement for any title changes. So if he were to put his property into an LLC, if that was a title change, we would have a 90-day seasoning requirement. So talk to the borrower, see what's best in their situation. I'm not going to give any advice there.
What about unique properties like barn dominiums? Would those property types automatically require an in-person appraisal?
No, no property type requires an automatic appraisal. Keep in mind for things like condominiums, no questionnaire is required. So we can do non-warrantable condos. Depends on how it's flagged though when we do that initial like inquiry with ABM. So if you're talking things like barn dominiums and stuff, depends on how it pulls off things like property type. I do an inquiry, see if there's offers, but there's no property type. There's no property where we say we need to do an appraisal again, unless it's like a BPO or something.
But borrower's not computer friendly. Are we able to send them paper documents to sign?
Nope,
Nope.
not at all. No paper. We don't even have paper in the office, I don't think. I think we burnt it all at some point.
Any commentary on the purchase of Kiavi and offering new products?
Oh, it's going to be really good. I don't have a lot of color on that. We're still working on that. Look for our press releases and everything online. But it's a very exciting time at Figure. I've been very happy about everything going on. So we're just on the up and up. I don't have a lot of information about Kiavi. But again, if you're interested, you can always go to our LinkedIn or our social pages, and we got a lot on there.
Are there online applications that are also in Spanish or other languages?
No, and that's a whole compliance thing. I get this question a lot, Alberto. It's a really good question. Just quite simply, the application's only in English and our customer support's only in English. I will say for those kind of borrowers, we can request translators for notary. So if you know that they're going to need like a Spanish speaker for notary, you or the borrower can contact our operations team as they're getting to that point, make that request. And then even if they're like have a notary, we can reroute them to manual notary to get a Spanish notary out to them. Just keep in mind, again, the application will be in English.
Derek says, thanks for another great webinar. Thanks, Derek.
Thank you, Derek. You're the best.
And how does one become a lender partner like referral or LO with Figure if I have an NMLS number?
Oh, good question, Anthony. I'll be sending out an email later to everyone that registered. It is going to have a link for anyone that's interested in being a partner with us. So you click on that link, you'll be able to talk to one of our sales reps and get some information on there. And otherwise, thank you all very much. You've all been really, really great. To close this out, because we're coming up on time, again, I'm going to send out an email that is going to have a whole bunch of information, information for our team, information on how to partner with Figure. Again, if you're interested, I will have links to our YouTube, links to a whole bunch of other information. So look forward to that. I'm going to be posting this recording here on our YouTube. I just have to edit it. Give me a little bit of time. And as always, thank you all very much for joining us. Mike, as always, it's been a pleasure. Thank you, my friend.
Take it easy, Alex. See you,
Have a
everybody.
great one, everyone. Bye.